and where you're joining us from. It says I can hear you. Fantastic. Edwin from Abuja. Welcome, Edwin. Going from um, Technical, please. I hope you are streaming this from Nigeria. Elizabeth from UK. Emmanuel from Lagos. Siraundo says I can hear you. Thank you so much. So welcome to today's webinar. I just want to confirm you all can see my screen. If you can see my screen, say I can see your screen. Just type. Can you all see my screen? So, can you all see my screen? Yes. Fantastic. So good evening, everyone. My name is Farouk Usman once again, and I'm excited to be your host for today's webinar. And today's real estate webinar is titled Unlocking Wealth Through Real Estate Investments. And today we're going to be looking at global real estate practices. This webinar is powered by GVS Cooperative. And today we'll be having amazing guests apart from me. We'll be having my group CEO, Mr. Rana Ijaz, and also our chairman, GTX Holdings, Dr. Stephen Akintayo. But okay, Chiamaka from Lagos, you're welcome. Oluwole from Lagos Island, you're welcome. Okay, so I want you all to do something. If there's someone you believe deserves to have this information about investment, because one of the problems we're having, especially when we come into the real estate sector, is that people go and invest blindly. So what are the things you need to know about investments that you do not know? What are the things you think you know? So here we are supposed to unlearn what we've known and relearn so that we can make better investment choices. I know some of us here are current clients. Some of you are looking to invest with us. Some of you are just here for general knowledge. But if you believe there's someone somewhere that needs to have this information about how they can create wealth through real estate investment, particularly on a global scale, just copy the link. I think it's gtexholdings.com/GRIW and send to people on your WhatsApp chats, on Instagram, on Facebook. Just share as much as possible. And for those of you that are joining us online, you can also share to people as much as possible so they can join us. Let me confirm the slide. Okay. So we're looking at the agenda for today. We'll be looking at introduction to real estate investment, land banking, rental income, REITs and debt syndication, OPM and OPT strategies, GVS investment models, as well as some comparative analysis between different forms of real estate investments. And also, we'll also be looking at Q&A session, whereby you all on the audience will be able to ask us some specific questions, perhaps on what we've discussed or generally regarding real estate. So, what is real estate investment? Anybody? So, real estate investment defined is it just involves purchasing, owning, managing, renting, or selling real estate to generate profit or long-term wealth. And I tell people, real estate is only vehicle of wealth creation that can help you to build wealth, manage wealth, sustain wealth, and pass on from generations to generations. A lot of people try so hard to build wealth, but most wealth that we understand, they stop on the second generation. The first generation, they maintain the wealth, while the second generation, they do what? They squander the wealth being created by the existing generation. But what does real estate have done? What has it done? With real estate, you can create wealth for yourself and create wealth from generations to generations. And when we come into investment, not just real estate ownership, there's a big difference between real estate ownership and investment. And a real estate investor and entrepreneur may participate in active or passive real estate transactions. And as we progress, I'll be able to tell you the difference between active real estate and passive real estate. But generally, in real estate, it involves purchasing, owning, managing, renting, or selling real estate to generate what? Profit or long-term wealth. So the first practice I want us to look at is land banking. And land banking is the definition of acquiring land in emerging areas before rapid urban development. I was at a GVS investment dinner about 3 weeks back, and There was a man, I think it looks in his late or early 50s, and I was telling him about land banking. And I said one thing. I said land banking takes between 5 years to 50 years. And he said, what is 50 years? What am I doing with 50 years? And I had to break it down. I had to explain. I said, imagine as you are now, 50 years ago would be, let's say, 1975. That's correct. If you had bought a plot of land in Ikoyi 50 years ago, how much will you have bought it then? And you're going to sell it now. What do you think the potential profit would be? 1970s, I'm pretty sure you can buy a plot of land in Ikoyi for less than 5,000 naira, considering the value of currency. Now, you cannot buy a plot of land in Ikoyi per square meter is selling for about, in cheap areas, it's selling for about 1.8 million per square meter, currently in Ikoyi. With 1 million, 5,000, you could buy 600 square meter. Look at the potential profit between 5,000 naira and what? And 1.5 million per square meter. Which means if you are buying 600 square meter, you are spending as much as 9 billion for a plot of land in Ikoyi. That is what land banking can do. And that's a space of 50 years. So when you are going into land banking, you have to understand that you are able to invest for a very long term. Another example, some clients come to us and say, where can I buy land and resell in 3 years? I want to do land banking. And I tell them, if you are going to buy land and resell for 3 years, you are just doing real estate sales. You are doing what we call short-term real estate flipping. But if you are going to go into strategic land banking, you have to ensure, number one, you are buying land in emerging areas that are about to blow. Example, Ibejuleki 10 years ago. Buying it 10 years ago and now is land banking. Ikorodu 5 years ago, even now is land banking. Badagry, buying Badagry now, holding for 5 years, 10 years, 15 years is land banking. So why land banking? Number one, low entry cost. Because these areas are emerging and developing, you are able to buy at a lower amount than it would be by the time it fully develops. Typical example is Lekki now cannot be land banking. You cannot buy Lekki land banking. You cannot do Ajah land banking. That's if you're in Lagos. In Abuja, you cannot do Maitama land banking. You cannot do Wuse land banking. Does that make sense? In the US, you cannot do New York land banking, right? You cannot do Miami land banking, but you can land bank in Texas because you can still go and buy in a low entry cost and do what? Hold for a long term for high appreciation potential. Number two, high appreciation what? Potential, which means this property you are buying, because it's in emerging areas, by the time you are able to flip or resell, the price of that property must have grown. And you're going to look at a minimum of 300% to 1,000% if you're actually going to do land banking very well. And I advise my clients, the least number of years you can land bank is 5 years. Anything less than 5 years is not land banking. For you to get good return on investment, you may be looking at 5 to 10 years. For you to get maximum return on investment, you can look at 10 years to 50 years. And that is why if you are buying in areas that will take a longer time to develop. The third thing you should look at if you are looking at land banking, particularly if you are looking at real estate investments, is that it is excellent for long-term investors. So if you are going to do something very short-term, land banking is not for you. It's not for you. And to just show you a practical example of what I'm talking about, I'd like to play this video. So, you don't know. I don't know if you can hear. Can you hear? You want the roots. So, let me give you some instances. This person was one of the customers who were considering saying, what is it? 1.5 billion. So when we're doing the due diligence, checking the documents and everything, it's covered something. It's not that the old that was bought it 250,000. They bought it 250,000. His own. His children are talking to us, negotiating. Wake up. Do you now get the point? 250,000 naira, 4.5 billion.
Here in Sadio City, Ijebu-Ode, where you can buy in hectares, acres, or plots. Jump on the offer today, and your future self will thank you.
Okay, did you hear that video? If you hear, just type I couldn't hear you. If you did not hear, just type I could not hear you, so I can know that I should replay it again. If you can hear the sound, type I could hear. If you could not hear the sound, type I can't hear. Okay, the words are breaking. I can hear. That's massive. I could hear. And exactly, that's what land banking can do. And we have one of our subsidiary called GTX Land. We call them the Rolls Royce of land banking. And I'm going to explain why we call them the Rolls of land banking. But you can hear what that means. It means, it said a land of 250K, right? By the time they wanted to buy, they were buying for 4.5 billion. And this man, he bought it, I'm very sure, at his young age. And his children are the ones doing what? Negotiating. Remember when I was talking about land banking and real estate investment before? I was talking about real estate investment being a vehicle whereby you can grow wealth, manage wealth, and transfer from generations to generations. This man single-handedly blessed his children by land banking. And he did not do 5 years. He did not do 10 years. He did between 20 years to what? To 50 years. That is the power of real estate investment. And one of our subsidiary GTS Land, we call them the Rolls Royce of land banking. And I'll tell you why. Because what we are teaching here is practically what we do. There are some of our clients that are here that must have bought. These are just practical examples of what land banking can do. And for us at GTEX, we have perfected the formula to identify locations that will get rapid returns on investment over a short and a mid-term. Let me repeat again. We've been able to develop a formula that allows us to buy properties in emerging locations that will get profits, right, in a short to mid-term that can get between 300% to 500%. And this strategy just basically tells you, property in Berry Beach from 2019, we launched it for 1.5 million. It's currently selling for 40 million naira. If you look at it, 2019 to now is 6 years. And this potential, if you flip 1.5 to 40 million, that's times 7. That's over, if I'm not mistaken, that's over 2,500% on return on investment. This is what land banking can do for you. Another property in Diaspora, 2018 was selling for 6 million. Right now, it's selling for 50 million naira. A property in Abuja, 2020 was selling for 4 million, is now selling for 38 million naira. A property in Ikorodu, 2015 was selling for 750,000. Right now, it's selling for 25 million naira. This is the potential of what investors get when they invest in real estate, particularly land banking. But again, the rule is that you must be willing to wait long term, right? One. Number two, you own the property as well. Number three, you have to understand that when buying this property, you may be required to develop it. You can actually sell, you can actually build. But if you are looking for the first thing we're looking at is now land banking. If you're looking at real estate investment that involves you waiting for a long period of time, land banking is what you should consider. Before we wrap up on that, let's go there.
There's a saying, you don't wait to buy land. You buy land and wait. Come on, let me prove it to you.
Sixth level of wealth is property, physical assets, real estate, property. Now, you may not be able to afford Banana Island or Ikoyi right now, but please go to Ejibo, Iriakari, Egbeda, Sanusi, Shangisha. Go and buy land somewhere quickly. Because God transfers wealth by giving you land. And over a period of time after you bought the land, He increases the value of the land because you being on that land, you're adding value to it, and as a result, more people want to come. Anytime there's a major wealth transfer in the Bible, He gives the people He's transferring wealth to land. My father bought land for something like 2,000 pounds nearly 50 years ago on Victoria Island. It was his federal government allocation, or Lagos State government allocation, on Akin Adeshola. From the revenue generated from building that house for free, that house, or the 2 houses that he built there, paid my education and my brother's education in the finest schools in the world. We bought 25 million naira 10 years ago. House on the Rock bought just under 10 acres of property on the Lekki Peninsula for our worship site. We built 1 building. We're going to build 3 other buildings there. Today, without the brick and mortar on it, that land by the valuers is valued at 3 billion naira. You should thank God I'm your pastor.
Have I been able to convince you that you don't wait and start buying? Here at Berry Polo Estate, where there is an opportunity for you to buy in hectares, acres, or plots. And remember, you don't wait to buy land, you buy land and wait. Jump on this wonderful offers today.
Ladies and gentlemen, are you getting value? So his father bought 2,000 pounds in Ake Adeshola 50 years back, and the proceeds from that was able to send him and his siblings to school. And he bought House on the Rock at the time of that video 10 years ago for about, is it 15 million he called it? And the current valuation is about 4.5 or 8.5 billion. That is what that bike can do in 10 years. So as we conclude, land banking pays off with patience and with the right partners. And you can never go wrong with real estate investments when done right. And you can never go wrong with what? With land banking. So we're going to the second principle that we want to talk about, and it's called rental income. Particularly, I put rental income there, but the definition is not rental income, because if you are talking about rental income, you're only talking about the money you are receiving in terms of rent. But regardless, property income refers to the profit or income received by the virtue of owning a property. I was having a conversation with a friend of mine two days ago, and she was telling me that she has a property in Ibadan, and she does not want to buy any property anywhere because the property she has in Ibadan, she cannot live in more than one. And I made her understand that you owning a property in Ibadan for you to live in is not an investment, rather is a liability. Because whatever is tying your money down and is not bringing money for you concurrently is no longer an investment. It's now a liability. Because that property is taking money from you on a daily basis. The same thing about owning a car, right? You own a car, you are driving to work every day. You're not saying you are investing in cars. You are not. Because every day you are buying fuel, you are fixing something. I know how much it cost me last week to change absorber on my car. It cost me about 90,000 for that. That is a liability to me. Now, imagine if I have a car and that car is being used for Uber, or being used for taxi, or being used for what they call it, just moving people from place to place, right? That car is bringing me money. That car becomes an investment. The same with real estate, right? So owning a home that you live in is not an investment, except that home is generating income for you on a daily basis, on a weekly basis, on a monthly basis, or on a weekly basis. So the reason why property income is there is because you are looking at the total profit by owning that property. Number one, you are renting it out, you are leasing it out, but there's also what we call capital appreciation. So who can define what capital appreciation is for me? Just type capital appreciation. What is capital appreciation? If they say a property has capital appreciation, what does it mean? Anybody? Just type. What do we understand by capital appreciation? Because property income is profits and income received by owning a property. Yes, rental income is there, but the only thing that also guarantees you that you've also made money is capital appreciation. So yes, anybody? No one knows what capital appreciation is? Anybody? You can just type. If you buy land for 5 million and after 3 years its value rises to 8 million, the 3 million gain is proper capital appreciation. Fantastic, Edwin. That's correct. Capital appreciation refers to the increase in the value of an investment or asset over time from the original purchase price to a higher market value. Awesome. Increase in value of the asset. Awesome. It means that the asset or land increases in price in your own favor. Yeah, typically you're all correct. So in buying properties for rental income, you are looking at two ways to make money. Number one, when you are leasing the property out, you're getting rent. And some of them is calculated in percentages, maybe 6% per annum. If you are doing yearly rents or monthly rents. If you are doing Airbnb, you can get considerably more because some people get as much as 20% per year. if it's well done. Do you understand? So that's what you get. But the secret to acquire land is land banking. That is the secret. The secret to buying rental homes is through off plan. And number one reason is because there's a cheaper entry compared to already built properties. So if you're buying a property that is already built, there's high probability the owner will tell you to pay at once. In some cases, because you are working with a developer, they may give you 1 week, 2 weeks. Best case scenario, you even get 3 months, which is at the very rare case. But if you are buying an already built property, you have to pay upfront. So if you are looking for an investment whereby you want to buy a home at a lower entry point, you are buying through off plan. The reason why it's cheaper is because the developer is still costing it based on the current value. Some of this off plan may take 2 years, may take 3 years, may take 4 years. At that point in time, by the time the developer is reselling or selling the other units, they are selling at a higher price. So remember, we're defining capital appreciation. Imagine you buy a property now for, let's say, $150,000, and you are paying on off plan, right? You're not allowed to spread your payments within 4 years. In the next 3 years, by the time the property is completed, the property is probably selling for about $200,000. 50,000 on it is capital appreciation on the property. So you've already made, how many percent is that? 30% on your investment before the property is already built. Does that make sense, everybody? So when it comes to real estate investment, off-plan sales, number one, there's a cheaper entry. Number two, there's a flexible payment plan. And number three, there's opportunity for capital gain before completion. This model works very well for us in our Dubai market, in our Qatar market, in our Nigerian market as well. In fact, there are some homes that some of our clients are able to buy, and they tell you it's very simple. You can start paying for this property. Let's say you have a 4-year payment plan, and some of them require you to just drop a 10% down payment, a 20% down payment. In some cases, some of them may even hand over the units because they may be building in different floors. Perhaps it's a 26-story building, and maybe they're on their second floor. And let's say you buy a unit on your second floor. Because the whole project takes 4 years, they can quickly finish your own project in 1 year. Does that make sense? And you are paying for 4 years. So you already have the house, you have the keys, you are paying for 4 years, and you've only dropped 10%, you only dropped 20%. You can resell that property 2 years down the line, and they give you the profits. Let me break it down. So let's use the same case study. You buy a property of $150,000 at off-plan sale in, let's say, Qatar, or let's say Dubai. And the property is supposed to take 4 years. And let's say 2 years down the line, you've only made, let's say, 30% that payment, or 40% or 50%. But that property is now selling for $200,000. You can sell off that property and withdraw your $50,000 interest without even paying up to half of that property. This is what capital gain before completion can give you. And you can only get this during off-plan sale. Now, in Nigeria, it may be difficult for you to get that. But in other foreign markets like Dubai, like Qatar, you can get this, right? And again, in some of these cases, you can even start renting out these properties. They start giving you return on investment. You also get a capital appreciation. So this is why you can also consider off-plan sale. So we're going to be looking at different markets based on if you are looking at acquiring off-plan, a very good off-plan property for rental income. Now, this breakdown is done specifically for rental income. It's not for you to want to live in, it's for rental income. So if you're looking at a property for good rental income, you're looking at minimum of 150 million to about 500 million. Yes, can you buy property lower than that? Of course. But people that buy properties lower than that may be good for them to live in. But if you're getting a property for you to lease out, particularly if you're looking at eyebrow areas, you are looking at doing Airbnb for that, you need to spend some money on furnishing, things like that. The minimum you need to get is about 150 million to about 500 million. There are properties more than 500 million, but please, in this right sense of mind in Nigeria, who buy a property of 500 million and rent it out? Do you know what that means? In Nigeria, the acquisition model, there's off-plan, there's outright. You are looking at annual rental income of 6% on an average, 12% what we call Airbnb in some places. Now, this thing can go as high as 30%, 40%. If you are having a monthly Airbnb, you're freeing up your unit. But to play safe, you're looking at 6% to 12%. In Dubai, entry level is about, let's say, 120K. That's if you are looking at studio apartments. They go as high as $500K. Yes, it's higher than that, but for rental income, people don't spend that much for rental income. You can do an off-plan outright. You're looking at 6% to 15% per annum. In the US, for you to get a very good rental property, the reason why I'm putting 250K is because if you are getting newly built, you can get as low as 250K in some places, like Atlanta, that's Georgia. You can get in Texas. You can get in some other places like Birmingham as well in the US. You can do mortgage, you can do outright. They rarely do off-plan sale in the US. Off-plan is mostly in Nigeria, in Asia, but for the US, most of them use their mortgage system, whereby you can acquire a down payment of about 30%. Some take 20%, depends, and you can get 20 years mortgage plan. Rental in the US is a bit low. You're looking at 4% to 10% per annum. It's only in Nigeria that you want to buy a house and someone will be telling you, can I make my money back in 10 years? No, it doesn't work like that. Because you have to also look at capital appreciation when it comes to buying properties for what? For rental income. Qatar, relatively, you can still do entry point of about 100K to about $1 million, depends on what you're getting. That's if you want to buy multiple units. They mostly use off-plan. Also, outright works, but off-plan as well. Rental income, let's say 6 to 10% if it's well done, because it's a very good emerging market. But are we learning something here? If we're learning type I'm learning. Then be sure you're learning something. If you're learning something, just type I'm learning. Okay. So these are some of the places we operated in our housing projects. We have some of our subsidiaries that are dedicated to ensuring people have property income, rental income. We have GTX homes that specify on luxury green and smart homes all across different 200 estates. We're building 25,000 of them, whereby people are able to buy some units to live in and also to lease out because they are located in strategic areas. GTX homes partners with GTX land to buy land and houses, to build houses on land in emerging areas. So you can get in early, right, and start getting massive return on investment over a period of time. Also, we sell luxury products in Ikoyi, in Lekki, in Ban Island with GTX suits. We're also in Dubai. We're also in UK. We're also in Qatar, where we sell good properties that you can get rental income, particularly in resort areas like resort destinations, high destinations for tourist attractions like Dubai and Qatar. Rental income is massive there, massive. Their weather is really cold. They don't have snow. So during the December season, it's fully booked. So you're looking at good residual income. Be looking at Dubai, looking at Qatar. In the UK as well, we have that. In the US as well, we also have that. We operate like that as well. The third thing we're going to be talking about is real estate investment trusts. Definition. These are companies that own or finance income-producing real estate across a range of property sectors. The key word is income-producing real estate. One of the benefits of real estate investment trust is diversification. You are able to diversify against across different real estate sectors, whether it is land banking, whether it is home ownership, whether it is equity projects, whether it is rental income. Real estate investment funds gives you the ability to diversify. Number two, there's good liquidity, right? For companies that are running this, there's cash flow coming in. Some of these properties are bringing in rents. They're able to pay their investors. Number three, they are good regular returns because, again, the keyword here is income producing real estate. Because they are able to finance income producing real estate, they are able to pay returns regularly. The fourth part is that you have low capital requirements to enter. If you're looking at what we're talking about in terms of rental income, you're looking at minimum of 100 million naira, 150 million naira to enter that. For land banking, depending on the areas you're looking at, maybe 5 million. And again, the secret in land banking is that do not buy individual lots, buy in acres, buy in hectares. You're buying 2 acres here, you're buying 3 acres here. Because remember when we were playing the videos of those that successfully done that, they were not buying individual lots. They were buying acres, they were buying hectares of land. So you may need a higher capital to go into that. But for real estate investment trust, you can do lower capital. 2 million, 5 million, 10 million, you are in of it. So the model that real estate investment trusts use is what we call debt syndication. And debt syndication typically means you are pulling resources to fund a large real estate development, right? And in debt syndications, your investment is fixed over a period of time. The returns you are getting is fixed, and there's no two ways about it. You know what you are getting at the end of the day. One good thing about debt syndication again is that investors can earn interest or share profits. Share profit is basically used for equity syndication. In equity, you are sharing the risk. So if the investment goes bad, you lose your money. The investment goes good, you make your money. You are sharing risk, you are sharing energy, you are sharing efforts. But in debt syndication, you are just getting interest or dividends on the investments you make. So the real estate investment company goes ahead and identify a good project for them to go in. They bring in their own expertise, right? You just bring your own passion of money, and they tell you maybe for the next 5 years, they give you X amount. The investment goes well, does not go well. As a debt syndicator, as a debt investor, is not your business. Your own is to ensure you do what you get a return on investment over a short or a long period of time. So this is the third type of real estate investment that you can do as an individual. But let's look at why we identify cooperative as the power of group wealth creation. Number one, cooperative allows you to pool resources and take on bigger projects. And I shared this a couple of weeks ago. I was talking about the fact that, let's even go back to the second thing we spoke about, which is rental income. So as an individual, you identify, let's say, a house in Dubai that is going to cost about $150,000. And you know that if you invest in this project, you are able to get 18% every year, 16% every year, 15% every year, but you do not have the financial capital to do that. The good news is that if you invest through a cooperative, they in turn pool resources together with other cooperative members like you, and they're able to buy into that project and give you the same 16%, 18%, 20% you will have gone into if you had bought your project on your own. So what cooperatives do is that, number one, they identify the good locations that they can do. They project for you as well. You just bring your own portion and you're able to get return on investment over a period of time. Number two, you are able to gain access to verified deals, usually for institutions. I was sharing one of our events about me getting a call from someone and saying, you guys are a company, we have these government projects, we don't give individuals, we only give it to companies. As a cooperative, the cooperative can stand as an institution and get over those projects for you that you cannot have access to do as an individual. The third key thing of investing in cooperative or big corporations is, number one, there's reduced risk, better due diligence, and stronger negotiation power. Because these institutions are quite larger, they're able to employ the best of the best, perhaps a bigger lawyer. The due diligence an individual will do is not as much as a corporation. There's more due diligence to protect the property. Anything goes wrong, they're able to go and fight for it. So the risk you do as an individual, it is quite reduced. There's also a stronger negotiation power with deals when it comes to working with a cooperative. The fourth point is pooled funds, OPM, which you call other people's money. Other people's money are actually working for you because your 20 million, your 50 million may not be able to take up the whole project. But because you have other people pulling resources together, you're able to get a larger chunk of the bites, right? Or what's that English? Larger bites of the whole project. The final part is that you have shared profits and shared growth. And this is the power of what cooperative can do for you when you invest through a cooperative. So let's just look at the differences between the three types of investments we look at to identify the best vehicle of wealth creation for everybody here. So the first criteria I'm looking at is the risk level. So for land banking, your risk level is low to medium. Why low? Why is it low? Why is it too medium? Because again, the income you're coming in is quite lower because you're buying in emerging locations. You don't necessarily have to do a lot on the property. Just ensure you do your due diligence. If it's well analyzed, right, your risk level is quite low. Every investment is a risk, everybody. Every investment is a risk. But the entry point you are using to get in also really matters. So because your capital is quite low, if you're buying acres, you're buying hectares, it's quite higher. So you have a low to medium risk. Real estate investment usually just between low to medium risk. If you're looking at rental income, the risk is medium because anything could happen. What if we don't get people to rent your units? So because of the capital you've put into, what if the developer does not complete the project in time? The risk level is quite on a medium scale. For real estate investment trust is lower because you are practically not doing anything. You're using what we call OPM and OPT. Other people's money are working, other people's time are working. You don't need to employ anybody. You're only just to say you invested this amount over a period of time is fixed and you get a returns, you get a capital over the agreed time. The second criteria is maintenance because it's land banking. Especially if you land bank with a real estate company itself, you are not spending any money or anything. You're only interested, maybe in some of them will tell you to sanfill your land. Maybe that's the only thing you are doing. So if you are buying from people like GTS Land, like us, we are doing luxury service estates. So you are just paying, you've paid all your dues, you don't have to do anything. Maintenance is zero, next to nothing. For rental income, you're having low to medium maintenance. So if you are doing the one that do yearly rent, by the time someone leaves your house, you may have to maybe repaint, you get a caution fee. If you are doing Airbnb, you also have to look at the fact that someone may break something, they may pay for it, but we need to actually still maintain it. You're also required every few years to repaint, redo toiletries, just because of the heavy usages in the house. So maintenance is required in rental income. For real estate investment trust, zero. Again, it's your money you are using. Your money is working for you. At the beginning, we are talking about active real estate investment and passive. So land banking and rental income are active because you are in the business. Real estate investment trust is passive. You are not putting your energy, it's just your money that is working for you. In terms of ROI, land banking is variable appreciation because again, land banking is between 5 to 50 years. Every year it varies. It's not fixed. And if you go and land bank in your village, your capital appreciation is very low. You cannot buy real estate with sentiments because, and I don't just mean your town. If your town is a good town, for example, if you are from Ijebu and you buy real estate in Ijebu, is a good investment. Does that make sense? But if you are from Ijebu Igbo, do you understand? You go and buy in Ijebu Igbo because it's your village. You know, your land banking is not going to be, it's going to be a longer term. Does that make sense? So it's a variable appreciation. For rental income is fixed and variable. Why? Your rent can be fixed maybe every year, and the variable is the capital appreciation because it varies across time. For real estate investment trust is fixed or shared ROI. Remember I spoke about equity. Equity, you are sharing profit, you are sharing risks. For fixed, they know you are giving X amount every year. The last criteria to look at is your exit strategy. For land bank, you are looking to sell at an appreciated value. Like I said, minimum of 5 years to 10 years. You can do 50 for maximum. For rental income, you are either reselling the house or you are refinancing it. In some cases, you are increasing the number of floors. You are withdrawing equity from it if you are doing in the US. So you're either reselling or refinancing. For real estate investment trusts, you are just withdrawing or reinvesting. So like I said, it's always like short term. You're looking at 3 years, 5 years. I should have put the timeline of holding this. So let me just say that for land banking, like I said, 5 to 50. For rental income, you can own it for life. For real estate investment trusts, you are looking at 3 years to 10 years for you to exit on your own. Okay. So let me talk a little more about the real estate investment trust so you can understand what we are offering. So for GVS Cooperative, we're the one that put together all this. It's quite important for you to understand what we do. So we're a registered wealth building cooperative. We're focused on high yield real estate and business syndication. We have a transparent process, a live tracking, and regular reporting. A little bit about us. Our subsidiary is here to democratize real estate investment, making wealth creation accessible through property ownership to everybody. By 2027, we want to have over 200,000 diverse investors, providing them not only with access, but active ownership in strategic real estate. These are just some of our team. We have our chairman, Dr. Stephen Akintayo, Mr. Rana, our group CEO, Ms. Bukola Lukon, Mr. Farah, which is me, MD, and part of my team, Mr. Tonye, which handles day-to-day operations as the general manager of GVest as well. So later today, we'll be having Mr. Rana share with us, and also I'll be honored to also have my chairman have one or two conversations with us as we progress. So back to us, we operate within Nigeria and the US. In Nigeria, we're a cooperative. In the US, we're filed with SEC as a crowdfunding wealth creation initiative to allow people to invest in different currencies in Naira and also in dollars. And we also have a GVest investment app just to ensure that all our investors are able to track their investments on a daily basis. So the GVest app, you're able to see your investment, see as your capital grows, as your investment grows as well, on a daily basis, on a monthly basis, and a yearly basis. And then you're able to do a lot. So as a cooperative member, you're also able to view your investments and ROI on a live basis, get updates on your payouts, secure wallet system, track your portfolio, get reminders, and access to your investments documents so that your investment can be with you on the go. This is just a dashboard of what our GVest app is looking like. And in the next few improvements is allowing people to take loans on their investments, proof of funds for embassy applications. Because you're in the cooperative as well, we're able to work with you for our programs that we have in the US. You're able to apply for it to get a visa, apply for programs we have in the UK to get visa as well. Use it as a good wealth management system, virtual card and dollar wallet integration as well. So a lot of you ask, where are the projects GVest or our real estate investment trusts are being put into? We help GTEX Land to multiply and expand their portfolio. If you can remember the previous slide where I've said GTEX Land have mastered the act of land banking, identified locations whereby they can buy, and in the next 5 to 10 years, you're able to flip it with a minimum of 300 to as much as 1,000% in profit. And I showed the case studies about 5 different estates that they have done that. And because of our investment in GTEX Land, they're able to expand and able to keep having more profits, to be able to pay our investors across time. These are just some of our projects. Talking about rental income, some of our clients are already living in these units in Jasper, Gardenia, and Ibejuleki. These are the one that we have on the airport road in Abuja as well. This is also in the construction phase as well, just to show transparency, generate income, and pay back some of our investors. In terms of land acquisition, these are some of the things we've also done across the 30 estates that is owned and acquired by GTEX Land. These are more pictures of what some of our projects are also done in Nigeria. The next part we're looking at is some of our projects that we're also funding in the US as well. This is a 99-acre property in Brookshire in Texas. We have a $200 million project portfolio that wants to complete in the next 10 years in the US. And these properties should have over 400 residential houses. It's a 10-year project that we've put together with GTEX, and some of our investors that invest in dollars are on this project as well. So for this, you're either coming in as an investor or you are coming in as a landowner for land banking. Like I said, land banking is a period. It's also identifying locations that are going to generate return on investment over a mid-term period of time. So you can come into this project for, this project is currently selling for $200,000 per acre, and it's selling for about $45,000 per plot. You can get into the project as well. Okay. This was just showing the old design and layout of what we are doing. We're putting a golf course, a stream as well. There's a lake as well. Individual plots are around the golf course. and around the water as well. We're building single family homes, apartments as well, commercial buildings. Is a whole lot. This is a 10-year project. Some of our investors are keyed into this for 10 years. Some have keyed into this for 5 years, where we pay them return on investment every 18 months, and they're able to withdraw their capital. The exit strategy is after 5 years, I want my capital back. I can decide to reinvest or buy into your projects. These are other projects that some of our investors also invested in. We intend to kickstart this project in the next 2 years. It's in Richmond, Texas as well. The current project that we're looking to kick off in the next 30 to 60 days is a 24 units in Tidwell, which is just 12 minutes from downtown Houston and 15 minutes from Bush International Airport. This is very close to downtown Houston, which is going to be hosting about 8 different World Cup matches by the year 2026. And our goal in the cooperative is to finish this project. And remember, the key word was income generating assets. This is one of our income generating assets for our investment arm, whereby we're able to use it for Airbnb. Because of the massive traffic that will be coming for the airport, for the World Cup, we're able to lease it out at a very high price, get enough, manage it for the next 10 years, liquidate, pay off some of our investors that decided to invest in this project for the next 10 years. So you can also invest in this as well, get passive income. Remember, this is OPM, OPT. Your time is not involved. It's just other people's money and your money that can generate returns for you. As we wrap up. So these are just some of the beauty of the projects that we're having in the US, where we decided to put some of our investment in, and then we can conclude on that. Okay, these are some of our investment that we'll be able to pay some of our clients. Since we started this 4 years ago, we'll be able to grow our investment portfolio. We've paid over 500 million naira already on return on investments, and we're looking to pay another 1 billion within the next 2 years, because a lot of our clients' investments will be due in the next 2 years. We're going to return in more capital. As at the first half of the year, we've paid virtually over almost the same amount we paid last year, which is by the end of this year, we should pay about 500 million in returns this year alone, because a lot of people are due towards October, November, and December. So the investment portfolio is growing and multiplying. Our goal is that we'll be controlling nothing less than 10 billion by the year 2026 in current transactions, based on the volume of investment that we're having all across Nigeria, and some of them that we're having in the US as well. These are some of the ROI we'll be able to pay some of our clients. 8 million, paid some 8 million this year, 9 million this year, 4 million, 3 million, and so on and so forth. So for some of you that may be asking, how can we get in? Remember, we're talking about real estate investment trust, means you can get in at a lower amount compared to rental income. You can get in for as low as 5 million naira. If you're doing lesser than 5 million, you're getting 16% per annum. If you're doing between 5 million to 10 million, you can be getting 18% per annum. 10 to 20 million, you're getting 20% per annum. 20 to 50 million, 22% per annum. 50 to 100 million, 24%. If you are doing 100 million to 500 million, 25%. If you are doing from 500 to a billion and above, you're doing 26%. And please, this rate is reviewed for the month of July. We're only going to keep this up for the first week of August. After that, we'll review based on current market conditions, and the ROI is likely going to drop a bit. And we're going to take off the minimum investment to be only 5 million naira. So if you are going to invest in this webinar, the offer for today is 16% to 26%, and it expires by the 7th of August. You can key into this offer immediately. The phone number to reach out to, the team will be dropping it on the chat box. You can reach out to the phone number if you are interested in investing in Naira. For the dollar investment, we're looking at between 7% to 14% per annum, minimum of $10,000. You can go as high as $1 million. Although we pay our ROI every 18 months for this, but you can get in as low as $10,000. Again, this runs for the first week of August alone. By then, we're closing the minimum investment to $20,000, and we're reducing the ROI from 7% to 13%. So the GVest team, can you drop phone numbers on the chat box so that we can see this? Okay. I'll be able to answer some of your questions. So please just type your questions in the Q&A session so that we don't miss it as we wrap up before I have Mr. Rana join us here. Okay. So in conclusion, land banking is a long-term and high reward. If you're looking at land banking, is long-term but high reward. Off-plan rental income is strategic for cash flow. So if you're looking for investment that will be giving you cash flow every year, every month, like I said in Dubai, off-plan rental income is what you should look at. Real estate investment trusts and cooperative offer low-risk group investing, right? And again, the final conclusion is GTX Holdings provides tested and diversified real estate opportunities that you can use for wealth creation. Before I end this session, it's quite important, like we said at the beginning. Real estate is the only investment you can do that can help you build your wealth, grow your wealth, manage your wealth, and transfer wealth from generations to generations. And you can do this by land banking, rental income, or having real estate investments with cooperatives that can help you make your money work for you. OPT, other people's time, and OPM, other people's money. Thank you so much. That's my time. I don't know if you have any Q&A so that we can have that, so we can have Mr. Rana join us next. Thank you. Any question? You can type your questions so we can address this. Why is risk level for real estate investment trusts low and not none? Because every investment is a risk. That's why it's called investment. In fact, if you're in the US and you use the word guaranteed investment, you'll be labeled as being fraudulent because you do not control the whole market. What if there's another COVID? What if there's a World War III? What if there's a World War IV, World War V? Right? What if something directly affects the source of income? So that's why we put it at low. Yes, from my end, we're ensuring that the risk is minimal. But even if it is 1%, there's a risk in every investment. I hope that answers your question, Mr. Fakunle. Okay. I want to stop sharing now. Technical, is Mr. Rana here? I think Mr. Rana is ready for us. Can we bring Mr. Rana up, please? So if you have any questions, please type it or put it in the chat box so that we can answer that. But did you get value, please? Did you get value? If you got value, type I got value, I got value. If you got value, just type I got value. Give us a slide on Naira investments. So I'll be showing you again, just to clarify that. Mr. Rana, are you with us? Let me just quickly show you that again. So let me just display this once again for Naira investments. So for the Naira investment, you're doing for less than 5 million is 16%. So that means you're either doing, as if you want to do it 2 million, 3 million, 4 million, you're getting 16%. If you're doing anything from 5 million to 10 million, you're getting 18% per annum. And this thing is held for 3 years or for 5 years. For 20%, you're looking between 10% to 20. Sorry, for 20%, that's 10 million to 20 million. For 22%, from 20 million to 50 million. For 24%, from 50 million to as high as 100 million. 100 million to 500 million gives you 25% per annum. And if you're doing from 500 million upwards, you're doing at 26%. I hope you're able to see this now. Mr. Rana, are you with us, sir? Okay. So, ladies and gentlemen, with a round of applause, please can you clap for our group CEO, Mr. Rana Ijaz, is my boss, is the CEO of GVest. over 2 decades in experience in investment as a CPA in the US. Is also trained. He operates from our office in Dubai. So please let's welcome Mr. Rana Ijaz. Good day, Mr. Rana. How are you doing today?
Thank you so much, Mr. Farooq. Thanks for having me. I was listening to your wonderful discussion. One word, that kept my attention in particular, you said every investment is a risk. I have a 25 years plus experience in investment banking. You know, everything is risk, but as long as the risks are managed, that's the real investment that pays you off in the long term. Uh, so welcome, everyone. Just to give you a brief introduction, I'm a group CEO for GTEX Holdings. I'm based out of Dubai. I look at my team globally. So you heard from Farooq, real estate is the only tool of investment that is a tool of real wealth creation and really transgenerational, and it has its own risks, but I think this is one of the least riskiest investment if you look at the investment portfolio overall. It really depends what's the purpose of your investment. As an investor, you have to identify what you are looking for. You can invest into the bonds, you can invest into the hedge funds, you can invest into the share markets, you can go to the public Fortune 500 companies, but eventually real estate is something over the history. It's proven it's one of the prime form of investments which investors look for and have successfully generated transgenerational wealth. Uh, uh, as a GTEX, we are a global firm now. Really, it was started like 16 years back home. Farooq touched base some of the projects in Nigeria. I just want to give you some of the global perspective. When you invest globally, you have to think few things more than what you see in the local landscape. I think the fundamental things, you have to always look at diversification of the properties itself. Within the property range, you can invest something into housing, something into land banking for the capital appreciation, something into the commercial properties. So always diversify. And when we talk about the diversification, always look into the new markets. There are always opportunities. Africa as a continent is a big prospect for the whole world. But if given the situation of market, when we thought of going global, particularly in the US 2 years back, the prime and fundamental purpose was to go and generate a precious foreign exchange and bring that back into our home base in Nigeria, which can go and we can invest into our projects. GVest is one of our cloud-based funding platform. I think it's an excellent model of fractional ownership where you have an access to ownership to a particular landed property. Because what we do in the GVS cooperatives, we take your investments, we do invest them into our landed properties, we make those capital appreciation and pay you those returns. And you keep your investment as liquid as possible. You can get your returns every 6 months and yearly, and one of the excellent returns in the market, better than a lot of banks. At the same time, your capital is secured and guaranteed in a way with the land-based assurance. You have access to our land-based property tomorrow. In case of fallbacks, you have that recourse options. But as Farooq said, there's no guaranteed. But we are a team of professionals who run your investments. We have run it successfully over the 5 years within the Nigerian landscape, and now in the US. GVest Capital is a full-fledged US SEC filed company. When I say SEC filed, Security Exchange Commission of US, we are bound to report them on regular basis. So there's a complete transparency. And what we are offering in the US are wonderful investment return in dollar terms. So even you keep any money in the banks in dollars, you rarely get between 3 to 4% at the max. But Farooq highlighted, I think look into those options. If you feel market is volatile within Nigeria, you can always look options outside with GTEX. Talking about the Middle East, I'm based in Dubai for more than 20 years. And when you talk about Dubai, Dubai is a real estate project in itself. There was nothing, it was a pure desert. Started with the vision of the ruler. No, if I give you the some of the benefits of real investing into the real estate. So GTEX is ideally placed. We have a partnership with a lot of development companies in the Middle East, in Dubai in particular, where we do bring an excellent offerings to our clients. And I think the benefits of investing in Dubai are, I think, I would say it's clear to everyone, but let me just highlight a couple of benefits. In today's scenario, if you come into Dubai, GTEX can help you with one of the highest rental yields if you invest in the Dubai market, because Dubai is booming. You can have a property bought in tomorrow, and next week you can rent it. So one of the highest rental yield, even the short-term rentals you can make up to 25 to 30% per annum. But if you even just rent it a regular rental rates, anything between 8 to 12%. It's a booming tourism industry. There's a no tax, taxation is one of the prime factor investors do look when they invest into the real estate markets. When I say tax, there are three kind of taxes. When you buy a property, you pay taxes. There's the annual property tax, and there's a capital gain tax. Capital gain tax, if you buy a property, for example, a million dirham, and you're selling at a 1.5 million dirham in 3 years, so that profit appreciation part, capital gain part, 500, you are bound to pay taxes. It is in the most of the developed market in compared to the US in the West, but in Dubai, you pay nothing except the initial registration fee of 4%. And again, it's a growing population. I was reading an article today. By 2040, it will be 5.8 million people only living in Dubai. Other than that, you get access to golden visas. When I say golden visas, it's a 10 years long-term visa, including you, your family, your spouse, even your house assistants, and you're free to live outside UAE as long as you wish to. Another thing, Dubai has become quite a stable market. It used to be an emerging market. I would say it's one of the developed market now, because fundamental of the market have shifted now. People are buying to live here. It is not that bubble of 2006 or 2007. And it's poised with excellent infrastructure, stable economy, diverse property options. One of the best property infrastructure you can find in Dubai, and we help our clients. So another benefit, I would say, Farouk was mentioning, if you don't have an upfront, you want to buy a property, start something with the off plan. Pay small token. In Dubai, we help you even with 1% payment plan. Arrange initial 15-20%, then you pay the rest of your property 1% per month. And you can rent it. There are ready-made properties in this kind of formats. So reach out to our GTEX team. Mrs. Bisia Kintawar is our CEO of GTEX Suits, who looks after the buyer, but of course I'm there to support her. And one of the best and strategic locations you will find in the booming economy, one of the safest city. Even the last month it was declared Dubai and Abu Dhabi again #2 in top. And again, if you are buying a property, you are having 100% ownership. You can own a business. You can Dubai residency can open the doors for the entire world, particularly within Nigerian market. Our Nigerian youth struggling to get those foreign visas. So these are few things about Dubai, and we're opening an office in Doha as well. And Doha is another emerging market, I would say. So reach out to our team. In the end, coming back to G West, because I'm the CEO of G West also, coming from the banking background, G West is something very close to my heart. It is a platform. It's a kind of mini bank where we take your investments, do invest them into the real estate and landed properties, generate those returns, and pay you in the liquid form. Thousands of satisfied customers. Farouk was highlighting a table. We have paid more than $1 billion in returns over the 5 years, and 500 million will be paid during this year alone. So good job, Farouk, and look forward. If there are any questions, I'm happy to take them, Farouk.
Okay, thank you, Mr. Rana. So, I just want to ask a question based on your experience and exposure in global real estate. For what you've seen particularly, I know you've been to Nigeria, you've seen the US in real estate, you've seen Dubai, you've seen Doha, you've seen Qatar. So, which of this economy do you think will be best for people to invest? For example, someone has, let's say, $20,000. Where will you advise them to put in their capital? What will you advise them to do?
No, I think excellent questions. Investment as no investment is bad as long you don't keep thinking. Sometimes we keep thinking too long and we lose the opportunities. Farouk, I've seen in my experience. The market, if you want to listen, each market is different. If you want to grow your money fast, and in terms of Naira, I think Nigeria could be one of the best market. You buy a property in one of the upcoming areas like Bejuleki or these areas, your money will multiply. But at the same time, if you want to secure something in foreign exchange, Dubai is one of the best options, where in $20,000 you can pay it down. It's not that amount, but something you can start with. You can buy something studio on an off-plan rate. And similarly, in the US, even we help our clients to buy in the US. But again, I would advise to go into the fractional ownership through GVest, where you get return in the liquid form and have access to that land-backed asset. So Dubai, Middle East, I think first go to the market. Market for me, if people are looking at a safe, stable, booming, and something for the future.
Okay, thank you so much for your time. I think that's the question I have for you. I don't know if anyone has any question. Let's thank Mr. Rana for his great words of wisdom. Anybody with any questions, can you type so um we can answer them. Any questions so far? Any other questions? Anybody? Okay. So thank you, Mr. Rana. I'll let you know if you have any questions as we progress. Technical, can you go for adverts now? Sorry, testimonials. Can you bring up our testimonials now, please? Okay. Someone requested to see a bit about our dollar investment offerings, so I'll be sharing that now. Technically, I'm waiting for you, please. So this is I'm just going to recap on this. So these are dollar investment plans. Like Mr. Rana also said, so if you have a $20,000, we're able to give you 8% returns annually. It's quite competitive in the markets at the moment. If you're doing from 50 to 100, we're willing to give you 10% per annum, 12% for 100 to 500, and if you're doing over 500,000, we're able to give you 14% per annum, and this is payable every 18 months. And the minimum years we do is 3 years or 5 years, whereby you can get your capital back. You can also decide to get your investment capital and your ROI at the end of the tenure, or you get your ROI by half of your tenure, that's every 18 months, and then you get your capital at the end, depending on what you want. Okay. Any other questions? Technical, you can go ahead, please. Mr. Zan said, just joining. You're well done. Thank you. Mr. Elizabeth says, do you have any video or a link to the Dubai projects, please? Yes, we do. I'll be sharing them very soon. Technical, over to you, please. You can also let me just drop a phone number, send a message, and then you get it on WhatsApp. So for anyone that wants to reach out to me, I'm dropping my phone number on the comment section. You can just send me a message.
Today we had an amazing time at our investors dinner with Dr. Steve McIntyre. Most of you know him. I know him very well. I know him personally. I've been his student for many, many years, so I can vouch for his integrity. And the knowledge that he gives out for free is just, what can I say? You can't even put a price on it. Today we had such a great time. We learned lots of things, and I think he took away the fear of investing in Nigeria. So at the end of the day, for years to come or in the future, Nigeria is going to be a gold mine. So I think it's a great opportunity to invest now, so that by the time years have rolled by, your investment would have grown. So today was amazing. We're having a great event on the 26th and the 27th of July. So watch this space and get more information.
My name is Catherine. Just finished with the hangout with Dr. Stephen Akintayo, and it's really a very beautiful experience. And the event we had with him today is actually about investment. We've learned a lot about investment in Nigeria and how we get understand land banking more, documentation, and the kind of things that we need to look out for, so that we are not scammed when it comes to buying properties, especially for those of us in diaspora, that we are not there to be able to see some of this land, And also you talked about the coastal road in Lagos. I know lots of people are kind of frightened about the investment they've already made, because they think, because of that coastal road, they've lost their investment. But GTS Homes from what I've seen, is a very good and reputable company, that even though some of those lands were lost, because he's lost a lot of money, and some of the acres of land were lost, they were also able to allocate to their investors. So they make sure that the investors, they don't lose their land, they don't lose their allocation. So from what I've seen and I've known about Dr. Stephen Akintayo, is a man of integrity. He always keeps to his word. Yeah, business can be hard, but then he tries to make sure that everything is right, by the books. So I really had a lovely time, the time to network with other investors, to meet other people, like-minded people, and also for me to grow in my mindset. So I'm really, really grateful that I had this opportunity, to be here today. Thank you.
A great day with Dr. Stephen Akintayo, giving us a great mastermind on real estate, not just in Africa, but in the US and Dubai. But most importantly, he addressed a lot of issues, the challenges with the new road in Lagos, where investors, that people that had invested in land, thought that the government was actually taking the land away from them to do roads. So all those challenges and issues with people that are losing land to the new expressway. So he addressed it quite well, getting everyone to have a more positive outlook to the whole idea that the new road has come, as opposed to being negative that they've lost a bit of land. So which I thought was quite an important takeaway for me today. So we look forward to the next event in July.
Okay, just to put a bit of context to what the conversation was about, it's one of the beautiful projects that we have here at GTEX. I was talking about our success story in Burial. Burial Beachfront was that property where we were able to sell at open amounts for 1.5 million as at 2019. And currently our property is selling for 35 million naira. As at by the time we were even getting that property, we saw there was going to be a major coastal road that will pass through those areas, but we made provisions for that to ensure all our clients we are located to were going to be behind the coastal road. Coastal road came last year. We lost about 5 acres. However, the beautiful thing is that none of our investment lost investors lost any of their land. In fact, their land is now directly facing the coastal road, which has now increased the value. And that's why when we're talking about GTS land being Rolls Royce of land banking, it's the due diligence that goes behind the scenes to ensure that every property acquisition is well documented, well verified, to ensure that we make enough money to pay our investors at the end of the day. Yeah, so that's what the conversation was mostly about. But technically, I expect to play testimonials of our actual clients that have got a return on investment. Okay, so you can go ahead, play.
And I am making this short testimony about GVest. I have invested with them for the past 3 years, and it's been a good time with them. They are very reliable. They are dependable. I have peace of mind, and I have my return for my investment every year. And as they have said, they are very dependable. They have professionals. Their staff are respectable. They are very professional. They are very loyal. They have integrity, and I have peace of mind. I am not sleeping and I'm like, hey, where is my money? What has gone on with my investment? This is just a short testimony. They are very reliable. I will forever do business with them. Thank you. Bye-bye.
Okay, I am Genesis Kobosho Akao. I am privileged to be part of, the investors at the GVest, which actually a few years ago I got to know about Dr. Stephen Akitayo through, I connected with him through Facebook, and I'm getting to, learn from his teachings on real estate investments and, financial management generally, and his great teams and the people that he was able to invite. I invested 3 years ago, 2 million, and right on time, a few months ago, I was able to get back my return, and I reinvested also much more than that recently, and I assure you, investing with GVest is a wise decision you will make. I assure you that. Thank you. God bless you.
Good evening, everyone. My name is Angel Asub, and on the right after with me is
Daniel Yates.
Alright, so Mr. Daniel, just give us a brief intro on myself.
My name is Daniel Yates. I am a key account specialist with Telecom Company and I'm representing with GVest.
Alright, so how long have you been in the GVest investment space, and how has it been? What type of experience have you had so far?
It's been 3.5 years, and the experience has been beautiful. I would say the customer experience is top notch. The staff are always ready to answer any questions, check up on you, and just put the extra mile for their customers.
Okay, so as a young person, would you advise your fellow youngsters, young people like myself, to go into the investment space, especially for like a GVest holding that deals with homes and infrastructures and all that?
Yeah, certainly. The investment model for GVest is very reliable. They invest and build green facilities and structures, landed properties, and that's the real way to make real investment. And I think every young person should get into that to increase their level of wealth.
Alright, it was nice having you on the red carpet, Daniel. Please have a lovely evening, and please network. Right now with me on the red carpet is no other than Mr. Igu Clement.
Yeah.
Mr. Igu Clement, good evening.
Good evening.
Okay, please can you do a brief introduction about yourself?
My name is Igu Clement. I am an investor with GVest.
Alright.
I invested in 2021 and got my return on investment by July 2024.
Wow.
Yeah.
So in essence, you've had a wonderful experience with GVest,
Yeah.
with GTEX generally.
Yes.
Okay, so what can you say about, just give us a one-word experience you've had with GVest.
Trustworthy. Reliable. Integrity.
All right, you heard that. GVest is trustworthy, they are reliable, and they do have integrity. Do well to jump on that and do well to invest and receive your returns like Mr. Igu Clement. Still have a lovely evening.
Thank you.
Trustworthy and reliable. Those are the keywords of GVest. I'm quite proud to be a part of this. Before we wrap up, some of us join later, but there's something very key I really want us to really ensure we get when it comes to real estate investment, particularly when it comes to investments. Okay, there's a question here. It says, is it only Dubai one can invest in the UAE? What about other neighborhood cities like Abu Dhabi? Yes, you can do that. You can do that. However, when it comes to real estate investment, particularly in the UAE, you have to factor the fact that which of these areas are people visiting the most. The better the tourist attraction, the better it is for you to be a foreign investor. I hope you understand what I'm saying. When we wanted to, before we decided to open up our office in Qatar, we visited Qatar, we did a survey. The number of tourists entering Qatar every year now has significantly increased after the World Cup. So if you're not looking at Dubai, Qatar is fantastic. Dubai was 15 years ago when it comes to investments in real estate.
Farouk, do you want me to chip in a few things so that I allow you continue and move on to other things?
Oh, yes, sir. Welcome, Dr. Stephen. I didn't know you were here, sir.
No problem. I want to thank all of you for joining today's meeting and beautiful presenters. I've been here since you started, but I think halfway when you started. I want to thank all of you for coming and beautiful presentation by Mr. Farouk. I've listened to a good portion of what he shared. I think now I don't even need to do any training. Just invite him to. I just invite him to share because there's a lot of wisdom in some of what he's been able to share with us about investments and things like that. A few things I just want to add. Number one, I want to say that you must understand that investment is a risk. Can everybody help me type it? I like call and response. Every investment has a risk. Everybody, please type it. Every investment has a risk. If you're not willing to lose money, you're not going to make money. Right? If you're not going to lose money, you're not going to make money. I often say this, we are millionaires because we've lost millions. We are billionaires because we've lost billions. We're thousandaires because we've lost thousands, right? We are zeronaire because we've lost zero. So you must understand there is a risk to every investment. There's a risk. I was just sharing with my friend and we're just discussing that people don't know that in business, it's not like up, up, up every day. No, it's ups, down, ups, down. I was with my mother today and she shared some very powerful revelation with me and my executive assistant that how she felt the problem of the younger generation, we call them Gen Z, right? And Generation Alpha. Because of social media, they expect things to always go up all the time. And life doesn't work that way. Up, down, up, down. And she says something powerful. She said, that is how to live long. If you live a life that everything is just up all the time, you're about to die before your time. Because you will think it's all by your power. You will forget the place of God. You forget the place of yes, you work hard, yes, you use your wisdom, but it is the place of God. There's the place of the spiritual for everything that we do. And you just get to understand that there's a supreme being that rules in the affairs of men. So when you're coming to any investment, including the ones of GTEx, face that there is some level of risk. There could be situation where Nigeria economy is going through challenges like Nigeria is going through right now. But one of the advantages of the kind of investment GTS does is that, hey, even if such happen, you have a land, right? And I think these are beautiful things. I don't know whether Mr. Farouk always disclose this and the management to the investors that, hey, if for any reason, and this goes to anybody who at any time who feels, oh, there's a delay in them getting their returns, we can give you land, and not just land at the equivalent of what you invested, but land that is 25% higher than what you invested. And it's in every contract of every investor. And I think that gives peace of mind, because you know that whatever happens, I can get real tangible asset. I can choose to figure out a way to go and sell the asset, right? I can leave the asset for more years and the value goes up. And I'm able to make even way more money. And we must have those kind of understanding. So when we're doing investment, you want to say, what happens? Because it's only in Africa that you see people say, I don't think I can have, I'm trying to do investment, I will never lose. There's no such thing, right? I'm trying to do investment that I will never lose money. I'm sorry, there's no such thing. You will lose money at some point. Okay? There will be some losses. So don't say I'll never lose money, but say, hey, what are the structure in place that the economy is bad, things don't go right, that that can reduce the chances of losses, right? That can mitigate against losses. That's the way you want to look at investment. That should be the mindset and the approach to any type of investment. Are we learning? We're learning type of learning. Okay. Number two, that I want to assure you that we as a company, we're not perfect. Okay, we're not perfect, but I can assure you that we have a team that is committed to keeping to every single word promised. We're not God. So if we tell you we're going to do A, it may not go the way we plan because we're not God. Okay. But integrity is communicating it. And that I assure you my team will always communicate. I've seen situations where people don't always want to hear the truth from me. And it's okay. You can test the truth elsewhere. But the truth will always be the truth. The truth will always be the truth. And it's up to you whether you want to, respect the truth, obey the truth, or you don't want to. But like I always say, truth is truth and it's constant. So the truth is one, every investment has a risk. But two, we are dealing with an organization that will do their best to keep to their promises. And if for any reason they cannot, they will communicate that fact. And I think that's all we can promise you, unfortunately, because investment comes with a risk. But we've seen people risk with us and they've win big. I have plans where people invested 1.5 million. The value is over 30 million now, 5 years. I have investors who invested with us. They got their returns in 3 years and they got back their capital. Yes. Are there seasons where there are delays? Yes. Because sometimes situations cause that beyond our control. But we are committed to making sure anyone who ever invests with us get their returns, get their capital. Once again, I want to thank every investor joining this call. I want to thank those of you who are also about to invest with us. And I can assure you, the future is bright. Whether you're investing with us in Africa, or investing with us in Dubai or UK or US, future is bright. Now, let me wrap up with this. It is risky not to take risk. The biggest risk of all is choosing not to take the risk at all. As much as investment is risky, but the biggest risk of all is choosing not to now take any risk. Because every day we're taking risk. You cross the road, a car can hit and run, right? You go for a course, you can fail that course. You get married, Your spouse can wake up one day and say, I don't love you no more. Every day we are taking a risk. The biggest risk of all is folding your hands and saying you don't want to take a risk. Remember, a little sleep, a little slumber, a little folding of arms, so shall poverty come like an armed man. So, thank you for being part of this webinar. God bless you.
Thank you, Dr. Stephen Akintayo. Can everybody just say thank you, Dr. Stephen? Thank you so much for your words of encouragement and your words of wisdom. Thank you very much, sir. Before I wrap up, I want to address a question. Someone asked that he heard most properties in Qatar are leasehold, and the difference between freehold and leasehold. So first of all, there are sections in Qatar that people can own properties on a freehold, and there are some places that definitely is leasehold. But a lot of the most places in Qatar where you can own properties are they're actually freehold. And the difference is just basically how you can own the property. So if you are doing leasehold, you're owning this property for a period of time, you don't own it for life. You have to return the land back to the government. For freehold, you are able to own the property for life. It also happens in Dubai, it happens in Qatar. So they have very, very similar rules. But yes, there are a lot of places in Qatar that you can own property on a freehold. You have Lucille, you have Pearl Island, a lot of places where you can actually own properties on the field. So, Mr. Let me get your name again. You can, Mr. Oluwole, yes. So, I'll drop my phone number again. You can send a message. I'll just give you more information about that, and I'll connect you to the GVS team. I think I can see it here. You can also drop your number so Mr. Oluwole can reach out to you. Okay, so thank you all for joining today's webinar. If you have any other questions, you can drop it. But before we leave and wrap up, I just want to quickly reiterate one very important part, especially when you're deciding what type of investment you want to go with. And we'll look at the different types of investments that we discussed. To recap, we spoke on 3 different types of investments. The first is land banking. And like we said earlier, land banking is a low to medium risk investment. You are looking at a minimum of 5 years to 50 years. For land banking, you are buying properties in emerging locations that are giving you high return on investment the longer you wait. For land banking, the longer you wait, the more the reward is, right? Land banking, we advise people to buy in acres, in hectares, so they can get maximum return on investment. If you are looking at rental income, the risk level is low, is on medium. There may be some maintenance, but you have fixed rent you are getting every year, every month, depending on how you are working. For example, in Dubai, you can do monthly rent. In Nigeria, they don't do that. They do yearly rent. The people that do monthly rent are the face might face you, if you understand what I mean. There's also capital appreciation, because if you are buying off plan, by the time property is built at the end of the day, you must have gotten a 30% capital appreciation, especially when you get into the project at the early phases. For your exit strategy, you can actually sell the property. If you're in the US, you can withdraw your equity. That's if you are looking at rental income. If you are not doing real estate investment trust, that's if you want to invest a certain amount of money to get certain return on investment every year, you're able to withdraw after 3 years or 5 years. Low risk, zero maintenance, fixed ROI, and you can withdraw and reinvest. So decide which of the real estate investments you want to do. You can look at these factors to decide the ones that applies to you the most. I tell people, if you're looking for something very short term, go for real estate investment trust. If you're looking for something mid-term, you can do real estate investment trust. You can do rental income. If you're looking at retirement wealth creation, go for land banking. Right? Go for land banking. Retirement wealth creation. You want to buy a land somewhere, maybe in Texas, worth $45,000. And in the next 20 years, you want to have something to fall back to. You can go into that. You can do that in Nigeria, do that everywhere. But if you are looking at monthly or what we call steady, consistent cash flow, you want something that will give you money every month, right? Go for rental income. And the best way to do rental income is through off-plan sale, because you are able to pay in 2 years, in 3 years, in 4 years. If you are doing a Nigerian project, you can pay in 18 months, in 2 years, and then lock down the current price. By the time you are done paying, you already have capital appreciation. For places like Dubai and Qatar, they even deliver the house to you and you still be paying. Some even do 50% handover. So the money you are getting in rent is already paying for your monthly services, right? So this is why you should also consider rental income and real estate investment trusts. So you can reach out to the phone numbers on the chat box. For those of you that join later, we'll be sending recording to every one of you, and a member of the team will also be calling you in the next 24 hours to ask if you have any personalized questions you want us to address. Our team will reach out to you one by one, and they'll be able to address that. Finally, the offer we gave for today was for our investment projects, where you are able to invest minimum of 2 million naira and get between 16% to 26% return on investment. And if you are doing dollars, you are able to invest a minimum of $10,000 and get between 7% to 14% every year, but we'll pay every 18 months. So you can reach out to the GVest team for this. And I think that's the end of today's webinar. Thank you all for joining. If you have any personalized questions, you can reach out to the phone number. You can also reach out to me, which I'll be dropping here, Farouk, on 0701 408 7669, plus 234 701 408 7669. I'll leave you in the hands of Technical to play a few testimonials. Until then, we'll see you in the next webinar. Have a great day.
Good evening, everyone. My name is Angel Asub, and on the right hand with me is
Daniel Access.
All right, so Mr. Daniel, just give us a brief intro on myself.
Hello, my name is Fumi. I'm here at the Investors Hangout with Pastor Stephen Akintayo, and it's been an amazing time with him, and we were able to ask a number of questions, and seeing him one-to-one with every one of us is really amazing. That shows his humility, that shows that he cares about how we do our investment. So it was an amazing time with him, a lot of advice as to how our businesses can grow and all that. And then just to encourage us to get his books as well, we have the Billionaire's Habit for Entrepreneurs, we have the Maximizing for Your Real Estate Investment, and Billionaires Codes. I mean, this is just a few of the ones I've bought quite a number of them, and it's really very helpful. And yes, and in terms of investment, it's been an amazing journey, very trustworthy, and in terms of customer service, next to none. I mean, I've spoken with a number of the customer service people. They get back to you real time, and they're quite very polite, and you just get the job done. So thank you very much, Dr. Akintayo, for this opportunity. We really appreciate it.
My name is Sylvia. For this investment hangout we have with Dr. Stephen Akintayo, one of my take home is advice on opportunities and place when and how to invest. I learned that it's very important to diversify your investments and the reason for that. And also for the investments I've also already done back in Africa, it was very smooth. I didn't have to visit Nigeria, and everything was smooth. And the customer service was superb, and yeah, he seems very trustworthy.
Hello everybody, this is Bukola Adigbola, and I am making this short testimony about GBest. I have invested with them for the past 3 years, and it's been a good time with them. They are very reliable, They are dependable. I have peace of mind, and I have my return for my investment every year. And as they have said, they are very dependable. They have professionals. Their staff are respectable. They are very professional. They are very loyal. They have integrity, and I have peace of mind. I am not sleeping and I'm like, hey, where is my money? What has gone on with my investment? This is just a short testimony. They are very reliable. I will forever do business with them. Thank you. Bye-bye.
Okay, I am Genesis Kobosho Akal. I am privileged to be part of, the investors at the GVest,